What's up, everybody? Welcome to Heresy Financial. My name is Joe Brown, and we're doing a little bit of a market update today. We're looking at the fact that gold has exploded to all-time highs. Silver is still on a tear. Bitcoin has finally broken out of its resistance level at $10,000. The dollar is still tanking, and it looks like the markets are about to tear off to all-time highs. Let's dive in. All right, guys, so I first want to apologize for the timing of this video being released. I'm recording this video on Monday, July 27th. And so by the time that I get this posted, who knows what will have happened. But as of the close of the market on Monday, July 27th, all of what I'm talking about in terms of prices are still true. Now, in one of my previous videos detailing how gold had hit 1900, I thought that we might see some consolidation, come back down maybe to that $1,800 mark and kind of consolidate, build some more energy here between 1800 and 1900. Clearly that didn't happen. We just skyrocketed right past that all-time high marker. Right now the price, the spot price of gold is at $19.50. And so what it looks like here is that the short squeeze was just a little bit too powerful and too strong for any selling to be able to keep it below that high watermark there. And so I don't really know how high will go before we come back down. Usually when you make a new high in any asset class, one thing that usually happens after that new high is made, you have a big rally, and then you'll come pretty quickly back down and retest that all-time high number. And so I wouldn't be surprised at all if the price of gold does go to 2,000, 2,200, you know, a really high number here, and then comes back down and retests that 1900, 1910, 1920, depending on how you measure, whether you're looking at futures or spot price of gold in US dollars. And so we could never see that happen again, but usually you do when you see something break out to all-time highs. Now, silver is currently at about $25 an ounce, so it has continued its fantastic rally, and it looks like right when it gets about to 26, that's when we start to see a lot of the resistance from previous support and resistance points back when the price of silver was above 26. And so I really do expect to see silver stall out there at 26 and kind of fall back down and see some profit taking and some more building of momentum once we hit that 26 mark. Just as a sign of how fast this market is moving, I'm throwing in this video clip while I'm editing this current video that you're watching, because the price of silver, just in between the time that I filmed it and am getting around to editing it, the price of silver just in the last couple of hours has already gone up. It hit a little bit over 26 and then started to tank. And so I'll throw a minute chart here up on the screen for you that you can take a look at to see what I'm talking about. But just in the amount of time that it took me to get from filming to editing, it looks like my target was already hit, where it did make it all the way to 26 and is now sold off down into the below 25, down to the $24 region there. So crazy fast market. Stay tuned. Bitcoin, what can we say about Bitcoin? Bitcoin has just started on a massive rip your face off rally. And so as of this moment that I'm recording the video, it is currently at $11,246 per Bitcoin. And so once it broke up above that $10,000 mark that acted as some pretty hard, some pretty strong resistance for it, I tweeted a couple days ago looking at the upside down head and shoulders pattern. I said, hey, if we break out of here, it's a fast ride to 13,000, and it looks like that's happening. And that 13,000 mark is where we've seen it top out at before. That's where we have some resistance. There's really a volume vacuum in between 10,000 and 13,000. And back a couple months ago when I made my 3-month price target video, I said I wouldn't be surprised if Bitcoin was all the way down at 6,000 or all the way up at 13,000. And that was what that was based off of, that lower support level and that higher resistance level. And so it looks like we broke up, not down, and we're headed to 13,000 pretty quick here. The dollar has continued its fall. My like I mentioned a couple videos ago, my projection from 2 months ago was that it would fall to 95. It blew past 95. And so a couple days ago, I said since it fell below 95, that the next kind of natural stopping point for it would be 93. And it's currently at 93.6. So we got a little bit to fall. And if it doesn't stop at 93, then the next support area for the dollar index is right around 88. And so the dollar index is the dollar, just in case you don't know, it's the dollar as measured against a basket of other currencies. And so this just means that the dollar is weakening compared to some of the other currencies in the index, which for us, for those of us who are in America, that means that buying things from overseas is getting more expensive, because if you buy things from another country, you have to exchange your currency for their currency and buy their stuff. And so if it takes more dollars to get their currency, then that means their stuff is more expensive to us, which means that the inverse is true as well. For people who are overseas, who are in other countries, it's getting cheaper for them to buy American stuff. So this is a bad situation when you have an inflationary environment, because not only do you have more money chasing the same amount or fewer actual goods, but now you have people from other countries who are really flush with dollars because they've spent the last years, and especially the last couple months, dumping treasuries, and what they get in return when they sell treasuries, they get dollars. Well, if you don't want treasuries, which are really just dollars that produce interest for you, if you don't want those, you're definitely not going to want to hold on to dollars that don't produce any interest for you. And so the last 10 years, America has exported a lot of dollars overseas. We've purchased a lot of stuff at cheap prices from overseas. So the world is awash in a lot of dollars right now. And so if the dollar continues to tank, well, number one, foreigners aren't going to want to hold on to a currency that's losing value quickly. And so if nobody wants to hold on to dollars anymore, the cheapest, or the easiest, I should say, way to get rid of dollars is to send them back to America. Well, how do you send things back to America? Well, you buy goods in America. You buy stuff stored. You buy food and actual manufactured goods that are stored in America. The other way to do it is to buy American assets, things like U.S. stocks, U.S. real estate. And so what we're seeing here with a weakening dollar is it's making it easier for all those dollars around the world to come back home. This is something Peter Schiff has been talking about for years. If you ever read his book, The Real Crash or Crash Proof, these books, he talked about how the United States has been exporting inflation for decades. And so at some point, all those dollars are going to have to come back home. And this is one way they do it, is by goods in the United States being cheap relative to goods in other countries. And so foreigners send those dollars back to the States, they get their stuff, and we're left with worthless paper and nothing on our shelves and asset prices that are sky high. Which brings me to the last part of this video, which is the stock market. And it looks like we are about to see kind of a parabolic takeoff, a parabolic spike in the stock market. And I made videos about this before, how the Treasury General Account has ballooned up to astronomical levels. I'm going to link that video in the description below, because that provides you with some information about some fundamentals as to all of the money that is not yet been plunged into the system. There's a lot of money that the Federal Reserve has printed that didn't make it into the banking system, into the economy, because it kind of got absorbed into the Treasury General Account, which is kind of a backup reserves account. And so if the Treasury decides to deploy that, that will be another boost, and another rush of almost $2 trillion into the economy. And so that's one fundamental reason for blowing up the stock market. The other one is what we just talked about, which is dollars from all around the world coming back. You're either going to buy assets or goods with that. And so those assets being purchased are going to be stocks and real estate. And then the last reason is because of the massive amount of short interest right now still in the stock market. Just the ETF SPY, it tracks the S&P 500. The short interest on that is still about 20%. And so if we still see a couple, decent up days or up weeks in the stock market, and all these shorts start to close out, that's a massive amount of buying pressure that you have to buy to close out a short. And so that's buying pressure that soaks up selling pressure, that pushes the price up. And so we could see a big short squeeze hit the stock market here, driving assets up, and then a FOMO rally sets in from there. And so obviously I don't have a crystal ball, but that's what it looks like. We have a lot of factors right now contributing to what looks like a parabolic melt up about to happen in the stock market. And again, I say this all the time, this has nothing to do with the economy. I think the economic fundamentals are crumbling underneath the stock market right now. We have more permanent business closures happening right now than we've seen in decades. We're just seeing a massive collapse of tiny, small mom and pop businesses, small shops, restaurants, retailers, and so we're seeing a massive collapse in the real person, the everyday real person economy, while asset prices are getting blown up to sky high levels. And so this is what it looks like is going to continue to happen for the foreseeable future. And so if you're going to play it, if you're going to bet on it, be smart, hedge yourself, use protection. But it doesn't look like the rally in the stock market is anywhere near over at this point. So that's all I have for you today. I'm kind of inserting this video in the middle of a couple videos that I have prepared for you here. And so I apologize if I've referenced videos that haven't been released yet, because I'm trying to stay up to date with what's happening in the markets while at the same time have some really quality info for you that's not reliant on, you know, the day-to-day news that's happening. And so I apologize if this if the timing of me releasing this video messes up some of the references that I make to other videos in the other ones that I'm posting this week. But hopefully it's not too confusing for you. Ultimately, everything will show up pretty soon here. So thank you so much for watching. I really do appreciate you guys. If you like the video, hit that like button. It really does help with the YouTube algorithms. You guys are the best. Have a great day.